It's like getting through. It's like threading a needle. I mean, there are world-class geologists, and the patterns. I mean, there's a lot of pattern recognition in gold mining. I mean, and gold discovery. And we've got a lot more tools than we used to have. We can fly aeromag, we can fly, we can do LiDAR surveys. There's all kinds of things that they can do to say, hey, based on the way this geology looks, there ought to be gold here. And then they poke a hole and they find out, yep, we're right, there is, or no, we were wrong, there isn't. But there's a lot of slip between the cup and the lip. And to get from there might be some gold here to gold coming out the door is a lot of time, a lot of money, and a lot of risk. Which is why in the gold mining space, the Bitcoin mining business is a pretty tough business too.
Stuff.
It's commodity, it's cutthroat, it's based on having low cost, and we've got some very nice companies that are incredibly low cost. So in the portfolio, and then they've also done private companies that are working around the edges and doing working on a piece of the the Bitcoin infrastructure and solution. So
Gold mine is a terrible business. It's running like a needle. Everyone has to pick this very carefully. There is a lot of risk in this business. When you have large amount, then you will jump in. The live price of Bitcoin is $64,467.60 per BTC/USD, with a current market cap of $1,274.36 billion US dollars. 24-hour trading volume is $26.72 billion US dollars. BTC to USD price is updated in real time. Bitcoin is plus 2.53% in the last 24 hours with a circulating supply of 19.77 M. Bitcoin BTC mining profitability fell in September from the month before, as the average price of the world's largest cryptocurrency was broadly unchanged while the network hash rate rose about 1.7%, Jeffries said in a research report Sunday. The investment bank noted that average daily revenue per exahash fell by 2.6% from the month previous. October is currently poised to be a harder month with BTC prices only up around 5%, while the network hash rate up plus 11% more than offsets that growth, analyst Jonathan Peterson and Joe Dickstein wrote. North American listed mining companies mined a larger share of Bitcoin in September than August and comprised 22.2% of the total network, up from 19.9% in August, the report said. This was driven in part by better uptime for these firms who benefited from lower temperatures. Marathon Digital, MARA, mined the largest number of Bitcoin at 705 tokens, followed by Clean Spark, CLSK, which mined 493, the bank said. Marathon's installed hash rate remained the largest in the sector and was 36.9 exahashes per second, EH/s, at the end of September, the report noted. Riot Platforms, Riot, was second with 28.2 EH/s. Jeffries noted that the Bitcoin election is coming to its conclusion and said that irrespective of who wins, we could see incrementally favorable policies toward the industry. Bitcoin surged 4% in 24 hours, recovering from a dip below $59,500 and now trading near $63,000 with key resistance at $64,000. Analyst predicts Bitcoin could consolidate before breaking key resistance levels, possibly leading to a new all-time high and altcoins market boost. Bitcoin faces major resistance at $63,620 and $66,650. Breaking through could trigger a market uptrend and benefit altcoins significantly. Let's take a look on Lary Lepard views and video, but before going further, please do subscribe my channel and turn on notification for more updates like this.
Given these macro conditions, I've got to invest differently than I have. I've got to protect myself from this monetary debasement, which is certain to come and continue and get worse over time. And so I pivoted and got into the investing in gold and silver mining stocks. I was vaguely aware of Bitcoin. I missed it in the early days. I bought in 2013. I missed it early on because I saw all the prior experiments that had failed, like eCash and DigiCash. And, the thesis was great, money free of the state, outside of the banking system. I loved it, but it had never worked. And so I was very skeptical of Bitcoin. I thought, well, this isn't going to work either, just like those other ones. And what I didn't realize is the genius of Satoshi and what he'd actually created a system that did work. And so anyway, that left gold and silver as the two best asset alternatives to protect yourself against monetary debasement. And so I went and I got smart about gold and silver mining stocks, because in the 70s, the last huge period of inflation that we had, those were the top performing stocks in that decade, followed closely by oil and gas stocks, because in an inflationary environment, real assets appreciate substantially, as we all know. So that's kind of the background of how I got here. And yeah, it's been a hell of a ride, because the silver and gold didn't work perfectly. They went up for a while, had a few good years, and they really took a hit, kind of an interim hit from 11 to 15, which was pretty brutal. And but I've stuck with it, and I could see, I watched along the way, and the book will detail all this, all the monetary steps they were taking. It just, things kept getting worse, and here we are. And some people say, well, this can go on for another 20 or 30 years. I don't think so. I think we're getting close to the end game.
So
It's a gold mining is a terrible business, absolutely terrible business. But
and these guys aren't operators, right? They're risk takers.
it's like getting through. It's like threading a needle. I mean, there are world-class geologists, and the patterns. I mean, there's a lot of pattern recognition in gold mining. I mean, and gold discovery. And we've got a lot more tools than we used to have. We can fly aeromag, we can fly, we can do LiDAR surveys. There's all kinds of things that they can do to say, hey, based on the way this geology looks, there ought to be gold here. And then they poke a hole and they find out, yep, we're right, there is, or no, we were wrong, there isn't. But there's a lot of slip between the cup and the lip. And to get from there might be some gold here to gold coming out the door is a lot of time, a lot of money, and a lot of risk, which is why in the gold mining space, what I tend to focus on more than, I've got some drill stories. There are three categories. The producers, developers, and drill stories. And the producers are the safest place to be, because they have a mine that's operating, that's throwing out positive cash flow. So, they don't necessarily need to go sell stock to dilute you on a daily basis. The developers who have a deposit but haven't built the mine, or the drill stories who just think they have some good looking rocks that'll turn into a deposit, those guys, there's risk all over the place. It's and many of them fail. And it's like, you've really got to pick them very, very carefully.
Lary Lepard, after experience, conclude that the banking system never worked well, that he suggests a shift on gold, silver, and stock exchange. The macro chart for Bitcoin shows the price is approaching the top of the bull flag once again. Could Bitcoin bulls be lucky this time? The Fibonacci levels for the entire 7 months of sideways price action demonstrate that $BTC is now firmly up against the 0.618 level. Surpassing this and holding above is the next step towards that bull flag breakout. That said, at the bottom of the chart are two indicators, one bearish and one bullish. The stochastic RSI ended last week with a bearish cross of the indicators. This signals that price momentum is no longer to the upside. Bulls will need to get behind the price in order to potentially reverse this cross down by the end of this week. In contrast, the Relative Strength Index, RSI, has turned back to the upside after making a higher high. Also, with this indicator maintaining above the 50.00 line, this signals that the bull market is still on track. The coming week will be a very important one for the bulls to try and maintain the upward price momentum. Given that the stochastic RSI on the weekly time frame has crossed down, this will not be easy. A vigorous tug-of-war between bulls and bears has commenced.
We're 64K. Like how
Yeah.
can I
Yeah. No, I encounter that all the time. They're like, well, yeah, but your basis is so much lower. I'm not going to put money in your pocket, blah, 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 blah. And I counter with kind of it's going up forever lower argument, which is, if you really consider, I usually come at that concern with the macro view, and I say, look, and this is, Jesse Croesus BTC on Twitter has done the best job of this, because he's got that beautiful chart or diagram, or schematic, I should say, where there's $900 billion of fiat assets, right? Real estate, stocks, bonds, cash, you name it, and there's $1 trillion or $900 trillion of fiat assets. There's $1 trillion of market value in Bitcoin. There's about 12 trillion, maybe a little more now that gold's up in gold, but really only about half of that's for sale, because a lot of it is in jewelry and museums and so forth. And so call it 6 trillion. That 900 trillion is getting debased every year, everywhere, because money supply is growing. So as Preston says, there are more monetary units chasing the same goods and services. And so, as that 900 trillion starts to worry about their debasement, they're going to start to choose a form of money that can't be debased. And they really only have three choices, Bitcoin, gold, and silver.
Yeah.
And so all of which represent money. That is going to, in my opinion, drive the price of all three of those assets to levels that people today can't even imagine. And I get it because, they look backwards and, fiat has been relatively stable for a relatively long period of time. I mean, the U.S. hasn't had hyperinflation since its founding, and it had high inflation during the wars, and particularly the Civil War. But people they look backwards and think, well, I'm good. This is America. This is the dollar. It's going to be okay. And yet, if you look at the policies that we're following, if you look at the deficits that we're running, if you look at the way we're printing money to support those deficits, these are the kinds of things that when they're done in other countries that don't have the world's reserve currency, they lead to inflation, sometimes to hyperinflation. And we're doing the exact same things. Now, other people say, well, we've got all the military, we've got all the guns, blah, blah, blah. Well, fine. But unless, we want to start a world war and force people into using our money, which I don't think we're going to do, people have the choice on what money to use.
According to my research, investing in gold and stock exchange is much better than other currencies, but investing in gold is time-taking and a little bit of risky. What are your thoughts about this? Share your thoughts in comment section. You like the video. If you like it, do subscribe my channel and turn on notification for more updates, and also humbly requesting you all for support channel. Thanks for watching.